Welcome to the Risk Reversal Podcast. I'm Dan Nathan, joined by Danny Moses, the host of the On the Tape podcast. Danny, how are you?
I'm good, buddy.
All right, we just got done with the Fed presser. We're going to hit all things Fed, what we heard, what we think about it, the market's reaction. But just stick around after that conversation. I had Rick Heitzmann, the founder of FirstMark Capital and the CEO of Dashlane, a cybersecurity company, John Bennett. Great conversation, all things cybersecurity and how Rick has been investing in the space for a very long time. So stick around for that conversation. It was great. Okay, Danny, we have basically an S&P that is unchanged. We're 25 minutes to the end of the trading day. You ran through the Fed's statement. Give us the 411 on what you read, what you heard, and then we'll hit the presser in a sec.
Everything would be perfect for the soft landing if it weren't for these tariffs and the unknown of what's going to happen was the takeaway. He's never used the word tariff that much. I would have to go back and do a control F or whatever the thing is, command F to put the word tariff in. You mentioned it a lot. He's watching two things and two things only, as is the mandate. He said unemployment and inflation. He mentioned that inflation obviously is kind of hanging out in the mid twos. He is concerned about a near-term tick up in inflation as a result of the tariffs, but he's not going to make that claim. He was very even-keeled. You know, it was just refreshing to hear an intelligent person give an assessment of what's going on with risks that are on both sides that can happen. And I thought it was a very logical, well thought out thing. And he was pretty feisty. A couple of questions came up about, oh, what if, Trump were to ask you to leave, or would you stay on the board? And he had nothing to do with that. He was most feisty when someone asked, we haven't met with this president yet. Would you want to? He goes, that's not up to me. So it's interesting. You can feel the hostility a little bit there. He wants to remain independent. I think he did a great job of
Yeah, I'm not sure hostility is the right word. I know what you're going for. I listened to it too, and I think those were the sharpest sort of responses that he had to questions. And I think a lot of it had to do with the fact he's not trying to leave, anything for innuendo, if you will, right? And, he hasn't had the opportunity to make nearly as many comments about this as, Trump has, because he can say it as he did, on TV whenever he wants. He can Truth Social it. And there's been a lot of that. What I find, most interesting is what Trump might say after that. And if if we're somewhere in between hostility and also matter of factness, that's something that Trump's advisors are clearly keying off. Now, the one thing I'll say is that he was asked, Trump, directly by Kristen Welker on Meet the Press this past weekend, would you fire the Fed chair? And he was pretty emphatic about that he would not do that. So I think that maybe for now we can push that out. But if he were to come back and say that, I think it would be a real problem again, Danny. So, is there any other takeaways? They don't do the dot plots on this one. Uncertainty was the other word. If you could control F, it'd be interesting to see which one he said more than the other. But my biggest takeaway was that he seemed to say this on many occasions, that the economy is doing just fine. You know what I mean? If it weren't for the uncertainty. So what do you take away from that? Because last fall, the Fed lowered interest rates by 100 basis points. They were worried about a weak jobs market. They don't seem to be so worried. On a few occasions, he basically highlighted the fact that the unemployment rate's at 4.2% and the like here. So I don't walk away with this for any more clarity about when the rate cutting cycle might happen and for what reasons.
So the Fed cut last year was a catch up, right? The neutral rate was too high. So they brought that down. They were waiting. Remember, they were so scared they waited too long that inflation was transitory. They waited and then they went. And I feel like now they feel like they're in a good place. To me, Dan, the next meeting's in 6 weeks. And he set this up in a way to say, okay, as of right now, I don't see an impact and it won't be caused by me if there had been. And so again, I think what he's doing is he's saying, here's my soft landing. If it messes up, it's because of you and these policies. And he did kind of insinuate we need clarity soon if we're going to be able to make these decisions going forward. And he left open the possibility that anything could happen. But I think what I read through that was, I think he's pretty keen on the fact that there are going to be inflationary things that occur near term, and then we'll see how it plays out. But the only way I believe, and I'm not putting words in his mouth, that inflation abates quickly as a result of the tariffs is lack of demand. Then that means the economy is slowing. So I think that's why he was so key to say, I got to focus on two things at the same time. If inflation runs high, but if I start to see unemployment move up as a result of all the stuff that's going on. And keep in mind, Dan, also, even before the tariffs, we were potentially, because of the cuts to the US budget and Doge and all that, we were seeing layoffs that were already occurring in tech land and the white collar jobs. We were already seeing stuff potentially slow on unemployment. So I think he's setting up in a way that gives him maximum variability on what he can do. So.
Yeah. There was a couple other things he was asked that I thought was really interesting. So he said, he was asked about some critiques of his management of monetary policy over the last few years. And he said, listen, we welcome it, and I thought that was like very interesting, but it brings me back to, and I pulled this up because Guy has referenced this on many occasions over the last year or so. On May 1st, 2024, at the FOMC meeting during the presser, he was asked about stagflation. And he said, I was around for stagflation. It was characterized by double-digit unemployment, high inflation, and sluggish growth. Currently, we're experiencing 3% growth, and inflation is below the 3% mark. I fail to comprehend where the stagflation threat is originating from. I don't see the stag, and I don't see the inflation. So I think that's changed a little bit, year over year. And so just break that out a little bit. I mean, Guy, was in the mindset, he thought that was a bit glib, but I think that comparing these two sort of, situations is probably, the 70s to where we are now is not that applicable.
Well, to compare May over May, a lot's obviously changed. And again, he did, without saying the word stagflation today, Powell did describe stagflation, that we could be headed into that environment, which is what I just went through on that step function. So I think he believes if we are in stagflation, it's temporary. That was the takeaway. And I think last year's read was, how could you see stagflation coming if inflation, which was trending down, an economy which was still staying strong? So I would have to agree with Powell's comment. I mean, never say never, right? Powell did indicate I never see that happening. But again, just like last Fed meeting, he said, this is the summary, you've ruined my soft landing potential. You've messed up everything that I've been trying to accomplish. Don't do this, right? Don't do something artificial that basically hurts this natural progression of how we see the economy and inflation playing out. That's how I see it. So I wouldn't overread into that.
All right, Danny, this just hit the tape right after the Fed presser, right after the markets are digesting all of the Fed speak and the like. And I think this headline is actually more important. It's coming from Trump. Trump to rescind global chip curbs amid AI restrictions debate. Now, they call this AI diffusion. The Biden administration put this policy in place. So not just focused on China or Iran or Russia or North Korea, because we do not want our best AI technology falling into their hands. And it's not just chips, it's also models and the like. And so they're also focused on some of our closest allies because they worry about this technology going from our allies backdoor into China or some of these other nations. So the one issue I have with this headline is that we started a trade war starting with our allies, but really focused on China for the most part. We're trying to have a lot of teeth to this, right? Trump put 145% tariffs on China. So those are the highest, A, that they've ever been, but B, much higher than some of the other ones. And those other ones are going to be negotiated in bilateral sort of manners. But this is the one that if you have export curbs, if you're worried from a national security perspective of our technology getting into the hands of our adversaries, pulling back on this, it really is another instance of the administration blinking or kowtowing to some CEOs who've done their bidding or done Trump's bidding and the like here. And so I just think this is another example that shows under most circumstances, this administration is likely to fold on some of these key issues. Thoughts there?
They realize they put a ton of pressure on these tech companies, to your point, in general, with the talk of these high tariffs and actually the implementation of them, at least for a time being. Are you saying that, obviously, if you're NVIDIA, this is a positive? You don't have to take a brain surgeon to figure that out. So obviously, it's like, let me give you relief somewhere else. My question to you is, does it compromise security, or is it hypocritical to the tariffs in general? Because one of the biggest imports or one of the biggest exports that we have potentially of our technology is to China and some of these other countries.
Yeah, but this for 20 years, we've been talking about forced technology transfer. Our companies have been talking about that. Our digital companies, our tech companies who go over there and they're doing the manufacturing. And a big part of that is that the companies that were doing the manufacturing that were subsidized and backed by the Chinese government, they were ripping off our technology. So the idea that we've had all of this opposition, you know what I mean, from the government for the most part to export our best technology, but we've had the technology sector, the CEOs and the like, pressuring Trump under this, new administration to kind of, pull back some of these, restrictions and the like. So I look at that headline and I say, and if I'm China, I'm saying these guys, not only are they not good negotiators, but they're showing us all of their cards. You know what I mean? So, like, how do you think about that as Besson is supposedly going to Switzerland to meet with some senior Chinese official to start the talks for, some sort of deal as it relates to trade?
I've said this before. I think the stock market and maybe even sectors in the stock market are the check on Trump's policies. And when they trade down, market, he tends to relent on certain things. When they trade back up is when he talks harder. So I'm sure this wasn't just a one-off. This must have been in the works for a period of time, or something they knew they could pull out of their back pocket to provide some relief, at least temporarily, or the psychological impact of the relief. And I'm not sure if this was the big announcement that Trump was teasing yesterday. He says, I have a huge announcement coming soon. I hope this isn't it. I hope it's something potentially better than this. But yeah, Dan, I guess it's just kind of a peace offering to the U.S. tech companies temporarily, so they stay off of his back. Maybe I'm not sure, but the policy's fakaked anyway.
It's meant to be a point of national security. And this is one of the things that part of the trade war is to bring manufacturing back to the U.S., to diversify our supply chains, also for national security reasons. Anything with the name Biden attached to it is being cut. The CHIPS Act. This is money that was earmarked for U.S. technology companies to bring manufacturing back here. They want to kill that. They want to kill this AI diffusion rule. So again, I just don't think it helps our negotiating sort of tactics. All right, Danny, oftentimes you'll see a move after the Fed meeting, after the presser. Oftentimes it reverses the next day. I think the clarity or the lack thereof that we got from that presser suggests the fact that, with the market unchanged right now, or up, 20 basis points with like 8 minutes left to go, is that investors really don't know what to make of this.
That's correct. And I think while you were talking and you're reading the red headline, we were down 20 bips on the S&P. We went up 75 basis points in the S&P. I assume on that news that you were talking about, right? And so I'm just looking at NVIDIA stock in real time, shot up to 118-ish, back down to 116. So yeah, again, this is the type of market that we're going to be in for a long time. And you got to, like I've said before, know what you own, bottom up, take advantage. So for perfect example, Dan, a move like that, if you know that you own a chip company, you're like, I got to get out of this thing at some point, and you get a pop like that, I don't know what the rest of them did in semiconductor land. Take advantage of crap like that and sell, right? The same way when talk of a tariff, which is nonsensical. Like, let's be clear. There is no way that these tariffs are going to stay. The problem with that is that what damage is going to be done on the way and how much can you repair? That's the problem. And I'll say this again. The trustworthiness of U.S. as a trading partner is damaged. It's not coming back anytime soon. Hopefully it comes back to some nice level, but it's not going back to what it was. And that's the part, Dan, you talked about earlier today on Market Call with me. The reason that I think it's to be so tough to get the S&P back above the 200-day is not because that's where the 200-day is. It happens to be during this time period. A lot has happened in the last 200 days, but you're not going to get back to those multiples. And if you don't think that earnings are going to reaccelerate, then by math definition, you have lower earnings than expected and a lower multiple. So that's where we're kind of stuck, Dan. And again, I think it comes down to stock picking, understand what you own. And it's just, I'm glad I'm not managing other people's money, Dan, right now, because it'd be very tough to have to stay invested.
Well, some guy who manages a lot of other people's money is Paul Tudor Jones yesterday on CNBC. He said, even if the tariffs come down to 50%, the disruption there is still massive, right? And so China is going to be the highest, tariffs when we're all said and done with this. And I think it's important for people to remember back in 2018, when Trump put tariffs on China, they didn't have a phase one deal until January of 2020. Just think about that. And the tariffs were much lower and the economy started to weaken in 2019. And to your point about us as a trusted trading partner, here's one thing. You can get rid of all those tariffs, okay, for the most part. Okay, there's still going to be a base, number that kind of sticks around, even for probably a lot of our allies. But nationalistic tendencies towards products and services that come from the U.S., they can't repair that in 2025. They might not be able to, repair that in 2026. And, there's certain examples like that. We don't know with Apple just yet, but China sales are dropping off dramatically for Apple in China. Okay. Tesla has seen a disastrous decrease in demand, not just in China, but also in Europe, actually also here in the US. So it's really hard to fix brand damage, especially when it's one of those situations where, you have in Tesla's case, an antagonizing CEO, but in Apple, you have a high price point device where their consumers have a choice. They can go with low end, Samsung or Android sort of phones, and they have their super apps, and DeepSeek is all over that device, that sort of thing. I mean, so those are some of the things that I think are really important.
Yeah, and I would add to that these are the chip companies coming to complain to Trump. The next are the private equity guys that complain as a result of these policies, because as Bethany McLean pointed out on her podcast, which came out today, that the people that get hurt are the low income consumers. And then think about this, the smaller businesses that'll shutter. Well, a lot of those smaller businesses and mid-sized businesses have loans out, and some of these have been syndicated out through private equity, through private credit, and depending on what segment you're in, what industry, and whatever it might be. So that's the next wave, Dan, and that would be what will cause Trump to go back to Powell and say, you got to cut rates because private equity is telling them that rates are too high and credit spreads are widening and all that stuff. So that's the next leg of this, Dan. And so the private credit, private equity being exposed to a degree is the end result potentially of everything that we're talking about, which has much bigger ramifications than just trying to figure out if Powell's going to cut rates in the next 6 to 12 weeks.
Yeah, no doubt. And I guess one of the things, people keep talking about the VIX, it's elevated. It's, right now it's come off a little bit. It was above 25. It's at 24. I stay focused on where's the 10-year. The 10-year is 4.28%. Gold is off 1.5%, right? The Dixie is kind of unchanged. So to me, we went from something that looked like risk on prior to, the Fed presser to risk off. So that's why I'm focused on the 10-year. That's why I'm focused on gold. All of those conditions are, helpful to the equity market, especially if you think you get headlines like we just got, and if the trade war is going to get tamped down and you think that something good is going to come out of the Bessent meeting over the weekend, the pain trade right now feels like it's higher. I think you and I both think it's going to go lower. I heard Jeffrey Gunlock on with Scott Wapner on the closing bell. He thinks we get down to 4,600. Paul Tudor Jones thinks the lows are not in and we could break those, So again, it's one of those things where you don't want to be too smart right now, because there is a scenario you get from a technical perspective through that 200-day moving average and the news seems benign. I think you probably go higher, but that's not how I'm playing it, Danny.
Yeah, you're still getting 3.8, 3.9% in money markets, people that can wait, right? You're still getting low risk, decent reward relative to what you're talking about, the volatility you have to deal with. And let me just say this, if we go to 4,600, everyone that says, I'm waiting for the market to go lower to buy it, they're not going to buy it, because that's just behavioral finance 101, because the reasons that would send it back lower are the stuff that we're talking about that could rear its head. And that's a lot of inflation as a result of tariffs, a lot of shelves that are empty as a result of supply chain disruptions, and just complete chaos. And we have completely forgotten about all these other things. We just take them in stride. India, Pakistan. I hope nothing happens. I hope the thing completely calms down. Those are two nuclear countries that are firing on each other right now. Thank God with not nukes. But I guess my point is, Dan, the geopolitical stuff out there only seems to be getting worse. And again, I will say this once again. Even before tariffs happened, there was stuff that was happening that potentially would portend a slowdown. And I think, so is tariff resolution potentially sell on the news at some point? I don't know. But if we go back to 4,600, I think it's going lower than that.
Yeah, the funny thing is, I'll just end it with this, is like, there's nothing particularly constructive out there if you're looking at it, right? Like, to me, the unemployment rate could probably only go up. Growth, although the GDP in Q1 was explained away because of the imports, that sort of thing, in my mind, it probably only goes down a little bit from here once that kind of gets re-rated, right? If you think about corporate earnings, it seemed like that was about as good as it gets, what we heard from Q1 results, that sort of thing. So again, I think there is, a rosy picture to be painted, that things don't get much worse from here, that some of the geopolitical stuff slows down a little bit. Some of the tariff stuff is overblown, and we have a situation where maybe, all of the trading partners, whether they allies or adversaries, we all come to our senses and say, who needs a global slowdown? That sort of thing. You give Xi a win, you give Trump a win, at least saving face, and then maybe you have a market on its way back to 6,000. I don't think that should be the case, but who knows, Danny? Really appreciate your time. We're we're into the close here. The market's closing up. A lot of benign stuff. I think the headline about the AI diffusion helped an awful lot. Appreciate it, bud. All right, stick around for my conversation with Rick Heitzmann and John Bennett, CEO of Dashlane. All right, welcome to the Risk Reversal Podcast. I'm Dan Nathan. I'm joined by friend of the pod, Rick Heitzmann. He's the founding managing partner at FirstMark Capital. Rick, welcome back to the pod.
Awesome to be back. It's been too long.
It has been too long. You've been busy. You're on lots of boards, but you're on a board of a great company called Dashlane. And we have the CEO here, John Bennett. John, great to have you on the pod for the first time here.
Yeah, Dan, I'm really excited to spend time with you today.
Yeah, this is one, you and I have got to know each other over the last, I want to say 6 months or so. And this is one of the companies that, some consumers probably take for granted a little bit. And we're going to talk about, because once you have a great application that's doing a really important thing from you and it works in the background, maybe you don't think about it too much. So we're going to talk about Dashlane, your products from a consumer standpoint, which I think a lot of folks who are listening to this, use these products one way or another. But enterprise has been a really important part of the strategy. You took over 2 years ago, I'm going to say, in 2023.
Just a little past 2 years now.
And obviously you put your fingerprints on a lot of stuff that you're doing. You've had a long background in software and SaaS, and you were there for like the explosion of SaaS before. I remember Larry Ellison on a call in 2007. Do you remember this? He's like, what the hell is the cloud? People keep talking about the cloud. So you were there at that moment.
And then he turned around and bought all these cloud companies.
Yeah,
once he dampened
100%. You know what? And then Mark Benioff says, I'm out of here. I'm going to start my own cloud company. And he's done an amazing job with Salesforce. And Rick, you led the seed round of this company back in 2010?
2010, right? Over 15 years ago, we thought about, hey, your identity and your password and what you're doing is going to proliferate. And you're going to have different websites, different applications, different devices that you're going to want to have access to in a very simple way, in a frictionless internet. And also other people are going to want to have access to. You got to prevent them from going on. And so we found some literally French students who thought the same way. And they had one application which kind of worked on Firefox, on a PC. And we thought, this is interesting. I think this is the beginning of a mega trend. Can we get involved here and then use this as a starting point to grow a very big company?
Yeah, and so this is interesting because Rick and I, we've talked about this both on the mic but offline a lot, is that, you think about generative AI right now, people are really geeked up about it, but the last major secular shift within tech was mobile social cloud, and it was happening right around then. And so, speak to it a little bit, John, of like how you were thinking about it. Again, you've had this like tremendous, multi-decade career. I'm not trying to, age anybody here. I've been in the business for multiple decades too. But at other organizations that you're involved with, are these things, you're on the precipice of this massive, sea change in the industry. Talk to us a little bit about your background in the software business and kind of what led you to Dashlane after 15 years of it being in business, I guess.
Yeah, I think one perspective is when you've been around as long as I have, you get a little bit better at looking some of the opportunities and the trends that emerge. And you talk about 2007 and Larry Ellison, and it's interesting. In 2008, my business partner and I, we sold our second company together. We sold that to Citrix Online, and that was again this emergence of GoToMeeting, GoToWebinar. These were products for being able to have conference calls and video calls and do webinars, and that was, I think, the beginning of this real acknowledgement of how rapidly things were going to move to the cloud, how disruptive that technology was. And, that time there, I think, was very formative for how I thought about what the longer term opportunity is. I was there for quite a bit of time and then ended up at LogMeIn, where I ran an identity and access management business unit. And that was about a $250 million business unit, and over a 4-year period of time. And this talks about adoption and sort of just the rate of growth that you can see in these businesses. When I left 4 years later, it was a $500 million business unit. And that was driven by the growth of a product line that was similar to what Dashlane was doing. Mm-hmm. And so sort of full circle is when I sort of got the call of we'd like to talk to you about this opportunity. And then I looked, first I was familiar with Dashlane and just loved what they did on the consumer product and how they delivered this great experience. And then the second piece, obviously, is who are the investors? And if you look at the investors, it's not just Rick Heitzmann and FirstMark, but you've got Sequoia Capital and Bessemer and Row Capital. So I had this sort of context, and I got excited about, hey, there's still a lot of runway in this space, and there's a lot of runway in this business. Very impressed with what they had done over the sort of the first sort of 12 or 13 years of the business being sort of in the marketplace. And so when I had my first conversation with one of the board members, I just got so excited about the passion that still existed in the business and what we could do to it in terms of like take advantage of some of these trends we were seeing, not just really in the consumer side, but the perspective I think I brought in is how big of the opportunity, how big of the market was, how big of the problem was in the enterprise market.
Right.
And that's where I sort of
and then I guess going back to the consumer side of things, Rick, when you guys made this investment, 15 years ago, some of the big incumbents were the ones who probably own this space a little bit, probably because of their platforms and their ability to kind of, market these products. And back then, if you think about the explosion of social, you needed to have a password, right, to get on this new technology. And I'm sure a lot of the scammers back then were looking at this and just saying, hey, listen, this is going to be, we're going to have a field day a little bit with this. So when you guys were focused on this, was it just about consumer, or could you see a path towards like enterprise applications for Dashlane?
Well, John hit on what the mega trend is. The mega trend was you're going to have this identity, maybe even multiple identities. You have your consumer identity, you have your enterprise identity that's going to proliferate across devices, operating systems, applications. And what our job is to do is ride that megatrend. We're not sure how that's going to manifest itself from a product perspective or from a market perspective, but hey, is there a trend that's big enough that we're going to see what happens? And even in the earliest days of Dashlane, we were doing analysis of what people were using as their password. And at one point, 60% of people's password was password.
Yeah.
And, and those were the things that were being easily guessed. Those were people, you were getting your account stolen, you were getting your credit card stolen, all of those things. So being secure has always been more important, and it only will continue to be more important as you're seeing more phishing, more spy versus spy that exists in the cybersecurity world.
Yeah. So I saw this, I read this somewhere. It was a feature, I think it was in Atlantic magazine, John, that you were in there. And I saw this quote, and as I was getting to know the company a little bit, I thought it was kind of funny that it said something like, you're trying to get rid of passwords altogether. Passwords themselves, and this is your quote, have progressed from security measure to security liability. Explain that. Explain that, because it's still something that I think annoys the crap out of most consumers, like trying to figure out all this stuff. Now, the enterprise get it. It's mission critical, right? Like for them, but let's think about that from a consumer standpoint.
Yeah, I think, look, I think one of the things, if you think about the origin of passwords, they just weren't designed to work across, tens and hundreds of applications that both consumers and businesses are living in and wanting to get into. And they certainly weren't designed for, the human brain wasn't designed to begin sort of saying, okay, I need to have something that's 12 characters or more and special characters in it. And so that what we've seen in sort of why these are a problem is, well, what do we revert to? I'm like, well, I've come up with this password that I think is kind of unique and I can remember it 100% of the time. I'm going to use it everywhere. I'm going to use it everywhere. And that has created, again, this rich opportunity for threat actors to take advantage of that, right? Because they're able to increasingly now, even with AI, is have very sophisticated phishing attacks or brute force attacks. And so their success is just getting, the velocity, the sophistication, the success is just getting better and better every year. But the context there in that quote was, what we want to do at Dashlane is be part of the solution. Like, we want to be able to say there's an opportunity for you to authenticate or to be able to get into the information, the credentials that you want to store without having to use a password. Right. And so that's where we want to be part of the solution. I think just touching on the enterprise piece, when Rick talked about this, again, these people, they're using, these passwords and 60% was literally password. Well, guess what? The same thing exists in business. And so I won't go into deep technical detail, but there's applications and security stacks that help provide a lot of security measures for employees. But there's all these applications that exist that are outside of that. And those applications are where the risk is for organizations.
All right, let's talk about one of those applications, which it sounds like Dashlane had one, but you killed it a year and a half ago. So these authenticator apps, like these drive me batshit crazy. Like, and I never had one until I like had crypto wallets. This is going back 3 or 4 years. And so the wallets were annoying enough, but then the authenticator apps, like, you know, there was a Google one and there was a Microsoft one, and those were probably the most widely used, right? And not only could I not get into the wallets because I couldn't get the authenticator, like then I would just lose those altogether. So what was your take? You got there in 2023, or you got to Dashlane in 23, and it sounds like by mid 24 you killed the authenticator app. Like, give me a little background on that.
What I kind of look at the business like Dashlane is like, what are we best in breed at? Where we've driven a ton of innovation in the industry, you know, around, you know, cybersecurity and around identity and protecting identities and passwords and credentials. It wasn't around like multi-factor authentication. It wasn't around these authenticator apps. And I looked at that and I said, we're kind of creating a problem and a friction point here. And there are other applications out there, whether it's Duo, whether it's Google, whether it's Microsoft, which are always just going to be better at that than we are. Like, let's do what we're great at. And what we're great at on the consumer side is, again, you know, providing this incredibly secure, you know, vault, this digital vault for people to secure their credentials and secure notes and your crypto key that you need, and don't ever want that to get out in the internet to anybody. Let's focus on that. And that's the same approach that we've done on the enterprise side as well. Is let's look at the stuff where we've driven a ton of innovation. We've got intellectual property behind that, and focus on solving what we think is a really big problem. But I think what I've seen in companies, and I saw this at LogMeIn, is a lot of times you just build up these applications and product lines over time, and they deliver some incremental value, but the cost of actually to the business moving faster and getting on that mega trend, it's a real hindrance to that. And so what I look at in any organization I come in is like, why does this application exist? Yeah. And that was why we killed it.
You've kind of hit on the key thing in cybersecurity, right? It's how do you secure people when people still use it? So the authenticator apps, a lot of cybersecurity people just don't use because it's just too hard. And I think the interesting thing about Dashlane is coming out of the consumer side, it was very focused on usability. How do we have an application that people want to use and makes their life better? And therefore, they're going to adapt it to become more secure. So it's the candy-coated medicine, as opposed to a lot of these cyber apps, which are just medicine and terrible tasting medicine.
So looking at it through the lens of the public markets, I'll just say this, is that we've had a lot of market volatility over the last, call it, month and a half or so. And some of the best performing stocks in the entire market, not just in tech, have been some of these security names like Zscaler, Palo Alto. I mean, these are names that you obviously know, CrowdStrike, really well. It seems like they're recession proof. It seems like they're tariff proof. Like talk to me a little bit how you see the industry, because you were just out at RSA. This is a couple weeks ago in San Francisco. Yeah, and this is the biggest security conference in the world, right? So everybody's there, from the big public companies to smaller startups and then larger startups where you live. What are some of the themes that came out of that? Because at least through the stock market, it's saying that these companies are good to go right now.
Yep.
Yeah, I think it's a great question, and I'll start sort of back up in terms of why I think they're performing and why they're more recession proof is we live in this space where things are changing so fast with generative AI and how we've talked about this, like the acceleration of phishing attacks and email attacks and social engineering and deep fakes. Well, one of the things that that companies are recognizing, they're also going through this digital transformation and acceleration in terms of moving stuff to the cloud and using AI. So one of the areas we've seen that there isn't a slowdown in terms of companies' budgets is they know they have to continue to sort of invest in their cybersecurity stack. And I think one of the themes that came out is, yes, that's because, as Rick talked about, just the acceleration in these different sort of threat landscapes. And now with the emergence of, you think about it, we're all in our companies at some level in every function are saying we're using AI somewhere in the company. We're using large language models. Well, that's true of every enterprise and every public and private company. We're all figuring this out. That's also now creating, injection of, prompts from a threat actor. And what does that mean for the business? So there's the existing sort of threat landscape that has not deaccelerated, and now there's a new threat landscape with AI. I think that's why companies, again, as you said, like Palo Alto or Zscaler or SentinelOne, maybe like sort of like not at that size, why they're still seeing the tremendous level of interest in their products, because they're solving for a real need. And then I look at sort of like companies like Dashlane, and what does that mean for us? There's this whole other element of it, which is we've talked about here, which is this human risk element, this human aspect of it. And companies are increasingly saying, it used to be, right, they'd come in and they say, okay, I've got single sign-on, I've got CrowdStrike, I've got my endpoints protected, I've got my cloud applications protected. And they would look at sort of credential security or password management as departmental. And what's shifted, and that's not just for us, but it's these other companies, now they're saying, I got to protect every employee in the organization. I need to do it sooner than later, because they're beginning to recognize that the human aspect is the biggest risk to their company right now. And so coming to RSA, I think a couple trends. One is it is this cat and mouse. There's an enormous investment in innovation on everyone in the space. We're rolling out an AI driven anti-phishing capability in June. All the scale platforms are doing things with agentic AI and AI agents. The flip side, it's also happening with the nation state actors and the other sort of cyber criminals, that there's high level investment, there's high level collaboration, and they're also seeing the opportunity of leveraging these tools. I think that's why there's resilience here, because the threat's not going away. It's going to continue to be sort of this friction between how fast we can create new capabilities to defend and how innovative they can be on their side.
Right.
So I think that was like the biggest takeaway from RSA.
And a lot of it would be about the humans. So people's biggest risk in their enterprise are their employees. And whether it's having a Post-it note with your password stuck to your laptop, or whether it's sharing your password, and whether you're at home and you're sharing a Netflix password, or you're sharing a Canva or Adobe password if you're a product manager, all these things are tremendous risks. And therefore, Dashlane's hitting on what we think is going to be the biggest growth category of really defending your humans against other humans and other threats out there.
Yeah, so this is interesting to me. We spend a lot of time, again, with public markets and thinking about the hundreds of billions of dollars that have been spent over the last, couple, 2.5, 3 years or so by the hyperscalers and the like. And they're basically, spending like drunken sailors. We've seen this before, and the pace in which they're moving and the dollars in which are being committed are like, they pale, in comparison to anything that's done prior. Do you think both consumer and enterprise, there's enough attention being placed on the scaling of these platforms, right, versus like security and the investment there? Because I could almost see this is something that there could be a gaping hole. We could look back and say, okay, all those companies are willing to kind of go forward and ask for, forgiveness relative to permission. And again, this is something maybe I get your take too, Rick. You sit on a lot of boards. Is this something that is a conversation that's being adequately discussed by the people that are, doing this allocation of spend right now?
Well, from my perspective as a board member, no board member is ever going to vote against security. Right. So whether you're an early stage company and you're putting your infrastructure at risk, you're a growth company getting ready to go public, the thing that you'll push on every cost, you'll want to be more efficient, but you're never going to say, hey, we need less security. We want more risk in our company. So because of that, I think that's what the mega trend you're seeing in all the security software companies. As this is becoming more complex, as it's becoming more dangerous, this is becoming a necessary spend category.
And just to add a little bit context on that, like where it's showing up in the enterprises and in the cybersecurity companies is, there's a couple trends emerging here, which is there's one thing to say, I've got employees, they're using compromised credentials to log into business applications that are available on the dark web. So how do you begin to get visibility and protect against that? And those are things that Dashlane's focused on, is like, how do you get visibility across every employee? But now talk about employees that are bringing large language models into the company and the type of data that's going into those models, highly proprietary data. So the stakes are much higher. So when we talk about shadow IT, shadow applications, it was one thing prior to AI. It's completely different now with AI in terms of, there's the example of, the Disney employee that downloaded, a video editor model, and there was key logging software on it. And what that meant is like they got into his credentials and they were able to get into, to Disney and do damage, right? And I think that's why you're seeing the level of sort of pace and to Rick's point of, I think enterprises and business recognize like, I got to move pretty fast here to make sure, one, like I've got the right security policies and posture within the organization, and I'm spending the right money in terms of on applications and security applications to begin thinking about, just the damage that can happen because of what's going into those models. That it's different than a Dropbox breach.
Right.
Versus than a large language model breach.
So in the public markets, we've seen a compression of multiples on a lot of the names associated with generative AI. But one space that seems to be really resistant to multiple contraction is the security space. I'm just looking at, I pulled it up on my fact set while we're talking here. A CrowdStrike trades at 124 times this year's earnings, 22 times sales, right? These are names that you've been involved in hyper growth tech companies for a long time, whether it be in the private markets and selling to public companies. And, when you get to like an M&A environment that should exist, when you think about the CapEx that's being spent by the hyperscalers, it's really hard for companies to buy, companies at these multiples and with these market caps, the way that they've kind of exploded. Like, help me think about that, because you've seen a bunch of M&A cycles. It seems like, and I'm not asking you to, comment on, you know what I mean? Like,
no, but you know about consolidation.
Yeah.
And, the good thing is that these guys trade at such premium multiples, and now they have vast distribution. And Palo Alto was built through acquisition. That once you get the CISO or the CIO's ear, you're able to sell more things into that, and Palo Alto has continued to do increasingly large acquisitions of products that they think are important. And that's why it's made Palo Alto an enormous company. It's what's made Okta a very big company in a narrow field. And I think you're going to continue to see that. Even Wiz, which is the biggest acquisition ever by Google, was driven by the same megatrend.
Right. And so one of the things I think is interesting, you just mentioned that they're acquisitive now. These were companies that were always on short lists of companies that were going to be acquired, right? And so now, Palo Alto and CrowdStrike have over $100 billion market caps, and so they cannot be acquired. I think your point about Wiz is a great one. And the thing about Wiz, on a podcast that we had yesterday that dropped with Gene Munster, friend of the pod, great investor, great analyst before he was an investor.
Fantastic.
And we were talking about, like one of the things that I found fascinating about the Wiz acquisition, and again, it hasn't closed. It's got to get through regulatory. I just don't think that's going to be a problem for regulatory. Here's a company that basically has one of the largest public clouds, GCP, right? They're basically saying that, we are not Azure, and we're certainly not AWS from a market share perspective, but we're going to buy a company that helps our clients think about their workloads across public clouds, and it's a security component, right? So talk a little bit about like the M&A environment, because Google had made, in my opinion, a recognition about what they don't have and how they're going to compete. So talk to us about the M&A landscape, because we haven't seen a lot other than that yet this year.
Yeah, I think it's one of the things that we're seeing in sort of that, and you touched on this, is there's now this realization that some of these scaled cybersecurity companies are becoming, they have the potential to become the size of a platform of potentially of a Google, or a Microsoft, over the next, decade. And you're seeing that in the emergence of, CrowdStrike and just the acceleration in their business, and the same thing with Palo Alto. I think from the M&A perspective, what you will see, even in this market, is they understand that consolidation may be coming in parts of the market, that the market is changing dynamically. And I think that if you look like what CrowdStrike, not CrowdStrike, but Palo Alto just bought Protect AI, super strategic, right? So I think they all have this, what do we need to think about in terms of continue to defend and also be ready to take advantage of some of these emerging sort of opportunities. And Protect AI was a great example of that, right? Which is like, okay, how do you start securing this AI infrastructure that enterprises are driving? So I do think, I don't know if we're going to see, a dozen, greater than $500 million, acquisitions, but I think we're going to continue to see, strategic acquisitions of scale across all these players over the next 12 months.
And it's going to be broader. You can imagine Microsoft buying folks. Obviously, Cisco bought Duo in the security space. I think that Cisco Duo platform will continue to look for products to sell into that customer base, and Cisco was built by controlling a customer and selling additional products into it. So I think this category is going to become much bigger, and they're going to look to have more products be sold into it, especially with such a changing landscape.
Right. Hey, coming into this year, with a new administration and some, this pro-growth supposedly agenda, which, again, the jury's still out on that one. But one of them was, okay, let's free up the IPO market a little bit. Let's, let kind of some M&A run its course. But, when you think about it from a regulatory standpoint, I mean, nothing's really changed as it relates to Google and Meta and, even Apple for that matter. And I think that's obviously something that a lot of these folks that lined up on the dais behind Trump at the inauguration in late January are probably pretty disappointed, because they probably had one goal when they were thinking about this. They know the playbook from the first time around, but again, nothing's really changed. And so I guess, Rick, this is more a question for you. When you think about the IPO market, I couldn't think of a worse name that started off the generative AI, if you will, adjacent IPO, which is this CoreWeave. I believe this is going to be, I'm not asking you guys to opine on it, the global crossing of this kind of era a little bit, and not a great one to bring out, in my opinion. But when you think about IPOs, like the volatility in the market has really probably, caused a few companies to take a step back. And then the question about M&A, like tuck-ins make a lot of sense. I could see some like $1 billion, sub $3 billion acquisitions really take, a kind of the lead versus IPOs. How are you guys thinking about that?
We've seen the same trend. A big theme of the second half of 24 was even, corporate development was picking up their pencils again. After being on the sidelines for a couple of years, and whether that was the Khan FTC or whether it was just volatility in the market in general or depressed prices, that was, everybody was put on pause. They started to pick up their pencils again. We just sold a company yesterday. We've sold probably a dozen companies in the last 9 months that have taken advantage of that trend. But then the tariff-driven volatility that we've seen over the last month or so has put everybody on pause. So both things are on pause. Both the IPO market's on pause, and to a certain extent, the M&A market's on pause. But it's obviously easier to turn back on the M&A environment. And I think what we're starting to see, and we're obviously very close to the corporate development teams from all the major players across the technology landscape, is, all right, well, once we get through this tariff thing and there's some volatility, I think that there's going to be some good opportunities for M&A, and that'll lead out, and hopefully you're going to see an IPO market which should open up after Labor Day.
All right, so John, this is Wednesday at noon, as folks, just to timestamp things a little bit, so they'll be listening to this on Thursday. And here's a headline that caused some massive market cap movement in the public markets today. So Eddie Q, who has been reassigned to run, Apple's AI strategy. Apple Intelligence was rolled out in June. A lot of fanboys got super geeked up about it. I think all of us were I know Rick and I were sitting around. You don't have to opine on it. We're like, there's no there, right? And these guys are so far behind, what an Anthropic and an OpenAI and a lot of those folks in the private markets have been able to do, and the funding that they've gotten, and they've basically, given a blank check to go do and build these things. And some of these large incumbents, even a Google that had been working on this stuff for years, right? When you think about, like, a lot of folks thought that they had such an early lead. And then after ChatGPT, Bard was a horrible rollout. Gemini wasn't doing particularly well. And so the headline today is that Eddie Q, they're thinking about adding, let's say, Claude or Perplexity for that matter, which, to their search on Safari. And so when I think about Apple's mantra has been security, right? Since the day that they started with the iPhone and all that sort of stuff.
Security and privacy.
But it's really held them back in a huge way when you think about this. And so now some of their competitors who they didn't think were competitors, let's say over the last 5 to 10 years, as they were building out this mobile strategy, this headline has caused Google to drop 8.5% as we are recording right now. Help me think about that a little bit. So Apple, one of the strong points of their ecosystem was security, but now it seems to be it's something that's held them back in a big way. And I go back 25 years or longer with Microsoft, some of the things that they were focused on, and it caused them to miss the internet and miss mobile. Help me think about that a little bit.
So if you just think about the context of Apple making the decision, like we're going to potentially work with, Perplexity or Claude. You also think about Perplexity. What did they announce recently? Right, they're going to build their own browser because they think that's integral.
As is OpenAI, by the way.
As is OpenAI. Yeah. I mean, OpenAI is
don't buy Chrome.
If they don't buy Chrome, right? And so I think
Google could not sell Chrome to them. Like when that headline came out, they were trolling. That was like an amazing Altman. That was an amazing trolling of Google. But again,
if you think about Perplexity, and you think a little bit about the culture of Apple, and again, you talk about the privacy and focused on the experience. The one thing about Perplexity that might be a good fit there is, they're the ones where you're using them to search that, you can go and validate all the results, right? Like they've got really this great experience. Like if you're doing research, they're going to have all the links to where the documents came from. And I think that does sort of fit into Apple sort of staying true to, hey, this data can be validated. You can trace it back. I do think it goes a little bit to the innovator's dilemma, in this case. And it, I talked about this, yesterday in the company at all hands, which is, I think there's going to be a compression in that time period of where large companies can be disrupted in a meaningful way because just the pace of innovation that's happening now. We think of what happened, from when we went from sort of like desktop to the mobile and the explosion of mobile, that lasted sort of like 15-year wave. And we're in a new wave now. I just think there's going to be a compression in terms of where we're going to see both on the positive side and I think on the negative side where, established players are meaningfully disrupted in a much shorter period of time.
And by the way, in 40 years of Apple's existence, we have never seen, well, let's go back 25 years because Apple was kind of on the ropes, you know what I mean, in the late 90s. But in the mobile era, from let's call iPod was a mobile device, and then the build out of an ecosystem with the app stores and the music stores and all that stuff, which obviously was really aided adoption of smartphones, specifically the iPhone. Apple is on the precipice of being massively disruptive. And I wish Eddie Q had listened to the Risk Reversal podcast going back more than a year and a half ago. He might do. But the point is, I was saying that Apple at the time, pre-WWDC last year, pre-Apple Intelligence, they should buy Perplexity. And this was when it was a $2 billion round. And I think they just raised it 20 because the idea that they weren't doing what the hyperscalers were doing. They weren't building the infrastructure to train large language models.
Right.
And they needed something on that device. They didn't need it on device. They just needed a cool app that gave users the reason to do it. And then you say, all right, well, is that going to cause an upgrade cycle? Because everything in their heads is like, what causes an upgrade cycle? I think Apple is about ready to blow it here. I think they're going to be years beyond, let's say, some of these other things. Now, you could say to me, well, they have a tremendous amount of high-end market share in the smartphone space, and they're going to have some time to figure it out. But help me think about, here's a company, based on what you just said, can they got security down-ish, but in this new world of, like, say, LLMs on the edge and that sort of thing, they're going to need a really good security strategy above and beyond what they've done on device.
I think everyone that is, bringing these applications into their ecosystem is going to have to heavily invest and rethink what their security strategy is and what their security posture is. And I think that's going to be, true of everyone that's, opening sort of these applications into their, ecosystem. I think the other piece around, sort of Apple and these large scale platforms and how, they had all these resources, all this money. I mean, one of I think the learnings for me as I've spent time, and I was at a conference where, the founder of Perplexity, presented, and the thing you sort of realize is the number of companies that are being started today that have no developers. They're building a business with AI agents and then you look at just the level of, now probably the talent pool is getting better now, but if you look at some of these companies, especially in Perplexity or OpenAI or Claude, this talent is it's very, very specialized, but you don't need like 500,
Right.
AI engineers like to have a real impact on the business. And I think that's one of the things I think I'm excited about is you're going to see a lot of applications and companies built on top of these foundational models that are going to come to market, and they're not going to have this massive burn.
Right.
They're going to come to the market, and they might be like cash flow positive like in the first 6 months.
We're starting to see some of those companies early on, but you're also starting to see some emergent winners, right? If you talk about Apple, you have to start building the ark before the rain came, and you've already seen some winners, and we've talked about that. And they're probably going to need to be in a position where they can act quickly with someone who's established, and part of the benefits of having $1 trillion market cap.
It's so funny because when I think about, I met one of the Wiz founders a couple weeks ago, and you look at this kind of relatively young guy, and he reminds me. And again, I'm 52 years old, so I don't mean to sound like, but I remember Sergey and Larry, and these guys were like the new guys on the block, disrupting some of these massive companies, AOL and Yahoo, and like this is going back 25 years or something like that. And you meet a guy like I just met, and you say to yourself, this is the sort of new blood that a company like Alphabet needs. You'll meet Arvind Srinivas, and he's like, Arvind, the first time he ever came on CNBC was on our show, and I had reached out to him actually through Ann Bordutsky, who's at NEA, and she's a great investor. And, she had made the introduction because we were talking about this company. This was not long after like ChatGPT was really getting some, and I was like these companies, like Eddie Q needs a guy like Arvind working there.
Yes,
they may have
100%.
some of those guys. I don't know, but Apple's made a big mistake that they have not put those people out in front of, let's say, consumers and the markets and the enterprise and that sort of thing. So again, I think we're on the cusp of seeing, there has to be a lot of strategic M&A coming in the next.
And you have to empower those people also, right? The world is moving so quickly that you can't manage by consensus. That you need to have people with an opinion, and you're taking that opinion and you're willing to move quickly. And I'm not sure, taking existing management enables you to do that, but being able to inject in people who have a bias to action, people who act with urgency, and people who are willing to take the next hill, I think will be incredibly important for all the hyperscalers.
Yeah, no doubt. I mean, I think this Apple thing is the battleground that I'm most interested in, because you think of their installed base and you think of their focus again on security and trust, and their lack of innovation in and around something that's moving really quickly. So, hey, John, leave us with something that we don't know about the security space, because this is one we started off the conversation a little bit where, as a consumer, I think I get technology, but this is a space that I find really hard to deal with. The products that you offer for consumers, I think, make it a lot easier for us to think about this and not have to worry about some of the worst case scenarios that you see on the news and stuff like that. People getting their wallets drained or, their identities taken or that sort of thing, because you get in one of those situations and it takes you years to dig out of as an individual. We run into those situations, and, it's just everyone, it has, such an impact on them for the rest of their lives when that happens. I leave you with something I think a lot of people maybe, don't know now is, so now we're talking about, the catchword from RSA was agentic AI, right? And agentic AI is like having an agent that has autonomy, right? So it can have sort of this autonomous workflow, within a business, and it can go complete tasks. So part of the things I think people don't know that, we're working through in the industry is, well, you're now having this idea of these AI identities, and how do you manage those identities? And the other part of it is, they're doing a workflow. They have to have access to credentials. And how do you make sure that access is secure? How long do they have that access? So I think, agentic AI, I think a lot of people don't know is it's going to start touching on all these different aspects of credentials and other applications, other data. And so again, making sure that, how do you make sure that all those touch points are secure and protected? I think that's going to be, you're going to start hearing a lot more about that. I think over the next 6 months. Yeah, well, I'm just a dumb podcaster and stock market jockey here a little bit, but as I read more and more about agents, and I get it, you think about this application layer, that's where a lot of the value is going to be extracted from all this investment over the last, few years or so, and I take the over on agents. I just think from a trust standpoint, I think it's going to be something first from a consumer. I'm not going to trust Expedia's agent to go book me a vacation and, understand all the things that are important to me, the nuance nuance of that sort of thing. And on the enterprise, the point that you just made, trust massive, right? And you got to think that that's where a lot of cyber threats are going to exist. So my point is that's a great runway for companies like Dashlane, because the longer it goes before consumers and enterprise trust it, it's more opportunity for you guys.
Well, the other thing you're seeing a tremendous amount of is bad agents, right? Evil agents who are going in and doing work of spyware, doing work of credential stealing, doing work of that oftentimes the bad guys adapt the technology before the good guys, and you're seeing the evil agents trying to penetrate the enterprise, and that's the great opportunity.
Yeah. Well, listen, guys, this was a great conversation. I think it's one that for our listeners are concerned from a consumer standpoint, it's great. We also have a lot of folks that invest the way Rick does, and I think this is the sort of thing that might be underappreciated when you look at the investment that's going on in the sexy stuff as far as generative AI and all the commentary that we hear about those building the models, whether it's Llama, whether it's Gemini, whether it's Altman with OpenAI and Anthropic, and the list goes on and on. I think there's there's certain cracks in all of these theses if they can't figure out to get businesses or consumers comfortable with the risks that they're taking. So, John Bennett, I really appreciate you being here. Rick, as always, we really appreciate your insights here. So I hope you'll come back today. Thanks so much.